The first question we are solving is May 2019 question 1. As you have on the screen, it says, in line with the provision of Petroleum Profit Tax Act, Cap P13 LFN 2004 as amended, explain accounting period of a petroleum exploration company. 2 marks. First of all, they're asking for the basis period. Okay, so the accounting period of a petroleum exploration company is what? Actual year basis, right? This is just 2 marks, so don't write epistle. You can have what? 1st of January of the accounting year to 31st December of that accounting year. 1st of January to what? The date of cessation of business, or the date of commencement to 31st December of the accounting year. As you can see, this is a going concern company, right? So any category you fall, you have an accounting year. This is a company that is ceasing operations, right? And you can see this is a company that is just starting. Okay, now this B part of the question, which is the main question. Priceless Oil Limited commenced crude oil production in Nigeria in 2006. The company has provided the following financial reports in respect of its operations for the accounting year ended 31st December 2018. What does that mean? The information they're about to give you is for the accounting year ended 2018. That is from January to December 2018. It says sale of crude oil, export 190,000 barrels. You can see the amount there, 2,850,000. They gave you local sales. They gave you other income. So your mind now will be refreshing everything that we have done in this class. They gave you expenditure incurred as follows. Can you see? Production costs, operation costs, intangible drilling costs, non-productive rent, royalties on export sales, royalties on local sales, custom duty on plants, cost of drilling 4 appraisal wells. Did we talk about appraisal wells? Only 2 appraisal wells are actually allowed. So when you see 4 appraisal wells, you deduct the cost of 2 out of it. Anything more than 2 appraisal wells falls under a disallowable expenses. So you can see the importance of solving question, right? Transportation and traveling. Can you say that? Salaries and wages, management and administrative expenses, harbor dues, donations, pension fund contribution, bad debt written off, miscellaneous expenses, interest paid, income tax provision. I'm sure everything is looking allowable in your eyes until you scroll down to what? Additional information. They said posted price for crude oil exported averaged $52 per barrel at an exchange rate of 306 naira to $1. Remember, we talked about posted price under income, which is the first variable in our format, right? Included in other income was 38 million derived from transportation of crude oil to refinery. Remember that is midstream. Anything transportation and storage, right, is midstream. It is not under upstream because PPTA focuses on upstream. Related expenses, which amounts to 16,250,000, was included in operation costs. So that expense is incidental to the income of 38 million that was earned. So we deduct it from operation costs. Remember that I said any cost that is operational that is not relating to Petroleum Profit Tax Act should be disallowed. Okay, so you're going to disallow that 16,250,000. Does it make sense? Yes, it does. Now, another thing you should know is that because they have given you a midstream activity, it means you will tax it under SITA. When you are done with your PPTA, you will still tax it under SITA. Additional information 3. The company entered into a natural gas contract with Tommy Limited. When you hear natural gas contract, what are you supposed to think of? A discount, a reduction. Remember, we talked about it under income. The value of the contract was 655 million and the load factor of the gas was 54 degrees. Depreciation of assets, which amounted to 120,250,000, was included in production costs. Like, seriously. Don't you guys know that this thing is disallowed? Okay, but they're just testing you. The schedule of qualifying capital expenditure acquired during the year is as follows. Now we are entering what? Capital allowance. Storage tank. It was acquired on March 12, 2018. That is within that year. Let me tell you guys something. Irrespective of when you acquire the assets within the year, you must grant Petroleum Industrial Petroleum Investment Allowance, PIA. You guys know this new act now. Is Petroleum Industry Act. So I'm always confusing it. Okay. PIA, Petroleum Investment Allowance. You have to grant it. Whether you acquire that asset December 29, one day to it, you will grant it in full. You can't prorate. Does it make sense? Yes, it does. So March 12, 2018, it was acquired. Then it is onshore and the amount is 23,500,000. Now, when something is onshore, it means you give it 5%, right, of your PIA. Then plant and equipment. It was acquired November 15, 2018. Everything was still acquired within that year. Continental shelf of 130 meters water depth. Can you see that this one? This one is inside the water. You see that continental shelf? So it is inside the water, right? We have 75 million. Now, when it is inside the water, I told you that up to 100 meters, you charge it as what? 10%. Above 100 meters, that is between 101 and 200, you charge it as what? 15%. So it means that this one will be charged at 15%. Okay. The unutilized portion of capital allowance brought forward from last year was agreed to be 33,700,000, while the agreed capital allowance for the year gone is 88,500,000. All those ones are allowed because they put that word agreed. Okay, so they don't want to stress you. It's only the new PIA. It means that the annual allowance is what? 88,500, because there are some existing assets they have now that maybe they're in their third year or their fourth year that they are still granting capital allowance on, right? Now, additional information 7 included in management and administrative expenses was 3.5 million paid on stamp duties for debenture issued and obtained by the company. Specific bad debt written off amounted to 39,500,000. The amount on donation was expended wholly, exclusively, and necessarily for the company's petroleum operations. And that donation, they talked about it, so you allow it, as in you will charge it. You allow it to reduce your profits that will be accessible to tax. Okay, so you don't treat it as a disallowable expense. This English, it used to confuse me back then. No. So the next one is a sum of 12,250,000 paid to another company. I like this one. To retrieve information relating to the existence of petroleum in the Nigerian Middle Belt region was included in miscellaneous expenses. You kick it out. You kick it out. Okay. You're not supposed to go and acquire information from another company. If you want information, you go to the government. But you know, government, you know how they are now. So people prefer to go and do their thing on their own, but they are saying you will disallow it. Okay. So interest paid included 20,500,000, and this was paid to an associate company. And that associate company means was related party. So it means that it has been influenced. Then they further said the loan was obtained at market rate. So you allow it because it is at market rate. It's an arm's length transaction. Exactly. It's not related party. Finally, as a result of the need to meet up with the return deadline on payment of petroleum profit tax, the 13th installment has become very urgent. So the management of the company has engaged your firm of chartered accountants as tax consultants to the company required. As the desk officer in charge of petroleum profit tax matters in the accounting firm, the principal partner has directed you to work on the file of Priceless Yoruba Girl, Priceless Oil Limited. Specifically, you are to prepare and submit a report on the following computations: 1. Assessable profit; 2. Chargeable profit; 3. Chargeable tax; 4. Total tax payable. They just arrange this basically the way you would solve it. Okay, this is a very simple question actually. Now look at the assessable profit. It's carrying 12 marks because to get assessable profit you need income. You go and solve for income, you use posted price, you do all of that, you go and adjust your chargeable gas, you deduct expenses. That's where the bulk of the mark is, because that's where the bulk of the work is. So what did they say we should do? You are to prepare and submit a report. So let's say you are in the exam. What will you do? You've answered A, just write B. You leave that space because that computation is not usually much. So let's say you leave a page and you start your workings, right? Workings. What are you doing first in your workings is your income. And you know that income consists of sales, right? The export sales and the local sales. You don't need the local sales because the local sales is straightforward. It's that export sales that has posted price that you need to go and work on. Priceless Oil Limited computation of accessible profit, chargeable profit. What's the next thing they said? Chargeable tax and total tax payable for 2018 year of assessment. So you're starting from the income. Okay, income. And the first thing is the export sales. Remember your format, you're following the format too. Now to get that export sales, that's when you need workings one. So put your currency sign, just put two currency sign. And so we can now go to workings one and start our export sales. So in the question, they said they sold 190,000 barrels. And remember that sales is number of barrels times price per barrel, right? And I told you that you compare the posted price with the actual price and you pick the higher. So what did they say about the posted price? They said the posted price is $52 per barrel. This one is not hard. I want a question that we'll have to calculate the posted price using the, okay, maybe the next question. I think the 2018 question, we'll solve it after this one. In that one, we'll calculate the posted price. Okay, they'll give you the API gravity, a rise or fall in the API gravity, like I explained in the introduction. So they said it is $52 per barrel. So we need our values in naira. So the exchange rate is what, 306 naira per dollar. So you multiply by 306, right? And then you get, my calculator, 10,912 naira, right? So it means that the value is equal to 190,000 barrels multiplied by 15,912. Then you multiply 190,000. That will give us what, 3 billion. These people are making money. 3,023,280,000. Now this value is value based on what? Posted price. You will compare it with the value. Let me check my laptop. The value based on the actual, what we saw there. Okay, that one is 2,850,000,000. So which is higher? This is higher, right? The posted price is the agreed price, is the price free on board. It is the price that all these countries have agreed that they will buy crude oil from the government. That's just how to explain it, okay? And it is determined by the American Petroleum Institute. That's why it is in dollars, so that we can just have a uniformity worldwide, okay? So whenever you see posted price in any question, always solve for the value of crude oil based on the posted price. Then you now compare it with the actual and pick the higher. If this one was higher, you go with this one. So you can see what they wrote in their account as 2,850,000 is wrong. They are going to pick what? 3 million. I'll be 3 billion. Let's abbreviate here. Is it abbreviate? I'll be summarize. So we pick 3 billion 23,280,000. 3 billion 23,280,000. So local sales, no need for workings for this one. They gave it to you at 653,700. You put it there, 653,700. Now the next thing in the format is what? Other income. Okay, we have other income. Yeah, in the format. So still under income, other income. So in your exam, because you're not allowed to write in exam, so you can just have a pencil in your exam question. You can just be tapping something like beside it. You understand? Just put a dot so that the examiner will not say you should stand up, because you're not allowed to write. So you can just put a dot beside any one that has issue. Like when we're reading the additional information, so that you don't start going over it from the beginning. You just put a small dot so that you remember that there's an adjustment you want to do on that one. Included in other income was 38 million derived from transportation. So that other income, instead of just putting the whole 128 million, you will deduct what? 38 million. Okay, so you don't have to do that one in workings. Just put it here. 128,100,000 minus the 38 million other income, right? So let's put that in our calculator, and that gives us 90,100. So it is actually 90,100 that relates to our upstream activities that PPT focuses on. The next thing in the format is what? Expenditure and all of that. But remember that under income, you still have what? Chargeable gas, chargeable natural gas, sale of chargeable natural gas. That is in additional information. What? Let me scroll. I have the question in front of me here. Additional information 3. The company entered into a natural gas contract. So you put what? Natural gas. Workings 2. You now go back and go and show your workings You understand? So this was workings 1, then you do workings 2. So the value, just write out the value. They said it is 655 million. Okay, the load factor of the gas is what? 54 degrees. So load factor is equal to 54 degrees. Now, what is the discount of a load factor of 54 degrees? You need a particular discount that you use to reduce this one, because the concept, as I said in the introduction class, is that when you sell gas, it will leak. Okay, the gas will leak. So maybe it's only 600 million that will reach the final destination. So you don't claim everything. The company, Priceless Oil, should not claim everything as income, because there must be a reduction in gas. So remember the standard we have: 50 degree, 60 degree, 70 degree, and 80 degree. These are the load factors, right? Then we now have the gas factor, right? We have 16.9%, we have 15.5%, we have 14.3%, and we have 13.6%. So sometimes to be given in the question, and I think in some questions they won't give you, just know you start from 50, 50, 60, 70, 80. Look at this one: 16, 15, 14, 13, 9, 5, 3, 6. Okay, so now 54 degrees is definitely between here and here, so we don't need this. It's between here and here we are looking for. So what will you do? Extrapolate. 50 degrees minus 60 degrees between here and here would be equal to what? What is attached to 50? 16.9% minus 15.5% over, you start from 50 degrees again. 50 degrees minus what you are looking for, 54 degrees, is equal to what is attached to 50? 16.9 degrees. My percent minus x, because you don't know what is attached to it. So you have only one unknown. Then you simplify, then you cross multiply. So we have 16.34. So what's that? 100% minus 16.34. 16.34. That's 83.66. Means that's the net that will go back. So just say multiply by 655 million. So that's 547,937,000. So that is 547,973,000. Right. So we're gonna put it there. Workings 2, 547,973,000. You know, we have abbreviated the thousands up here. So after we are done with all the income, then now we can now go to expenses. So you check within your question. I'm checking my laptop now, there's no any other income. So then we go to expenses. The first thing is production cost, right? You put it there, production cost. Remember that you've read the question. So anything like production cost, does it have an adjustment? Yes, it does. Okay, they said something about depreciation in production cost. Let's check the question. They said depreciation of assets which amounted to 120,250,000 was included in production cost. So you deduct depreciation. Okay, you can just say less or 749,980,000 minus 120,500,000. Okay, so you put that in your calculator. You have 629,730 as your actual production cost. The next thing is your operational. Is it operational? Operation cost. What did they say about your operation cost? That expense that is related to this 38 million, that's 16,250,000, is included in your operation cost. So you deduct it. That would be 930,720 minus 16,250,000. So you put that in your calculator. 914,470. The next thing you have is your intangible drilling cost, and they gave you the amount to be 255,600,000. There's no adjustment on this because the additional information said nothing about the intangible drilling cost. We have non-productive rent as the next one. You have 92,070,000. The next expense here is royalties on export sales. I hope it's showing. Royalties on export sales, 43,790,000. Just put it there. They didn't say anything about it. The next one is royalties on local sales. How much is there? 10,800,000. Put it there. The next thing here is custom duty on plants. They said it is 39 million. Custom duty on plants, 39,100,000. The next thing on my screen is Cost of drilling for appraisal well. Cost of drilling for appraisal well. So only 2 appraisal wells are actually allowed. So cost of drilling appraisal well, they drilled 4 in the account, so only 2 is allowed according to PT. So you say 2 out of 4 times what's the total cost of drilling appraisal well? That's 104,400. 104,400, and that will give you how much? 52,200, right? The next thing on my screen is transportation and traveling. Now this transportation is not that's one in midstream, transport and storage. This one has to do with maybe the staff movement and all of that. You can see they said nothing about it. So it's an expense, transportation and travel, not transport or storage or movement of crude oil itself. This is for staff, transport and traveling. How much? 28,300,000. You write it. The next thing is salaries and wages, no adjustment. How much did they say? 395 million. 395 million 200. Okay, 395 million 200. I hope you guys are not bored. Take popcorn. Management and admin expenses. Did they say anything about that in the question? I think they said, let me quickly check. Yes, they said something about it now. So they said included in management and admin expenses was 3,500,000 paid on stamp duties for debentures, debentures issued and obtained by the company. So you're going to deduct stamp duties from that. 105,900 minus 3,500,000. Guys, sorry for everything. If I do this thing on the board, it's gonna be worse, I promise you, because there's not going to be space. Then I'll have to dress up and the stress will be much. 102,400. That is what I have. I hope we are right, we are correct. If you see any mistake, say it in the comment section. Like the next thing here is harbor dues, 25,480,000. The next thing is donations. You know, we saw donations in the additional information. So donation here is 25 million. You write there because they said that it is reasonably. I remember that when we were reading it. Now the next thing is pension fund contribution. Space don't finish. See the space we left for pension fund contribution. What did they say about pension? Because that one is very important. 1, 2, 3. They didn't say anything. No, they didn't say anything about pension. So we assume that it is an approved body. Okay, we just assume that it is an approved body. So 52,500,000. Next thing is bad debts. Yeah, bad debts. I think it can still contain here bad debts. So they said in the question that it is actually only 39,500,000 that it is specific. So that's what we're going to put. Then we move to the next page. So it's just a continuation, right? So the next thing we have is miscellaneous. Miscellaneous. Okay, miscellaneous expenses has that information fee. So that is how much? 57,600. 57,600,000 minus 12,250,000, right? And that will give us 45,310,000. So you put that. They asked us to write a report. We've not written report though, so that's what we're supposed to do. This one is just like workings. Yeah, this is your workings. Don't forget, this is workings. This is your appendix. Okay, so this one is appendix. You can just write appendix on top. This is not your report yet. So after miscellaneous, would we have any? Okay, we have interest paid. The expenses is long, so interest paid. What did they say about interest? Okay, they said the interest is at market rate. There's no problem, so it still remains 35 million. That even if it is related party, it is at market rate. So that is the last thing. Okay, we have income tax. That income tax provision is not allowable. It is said in the Petroleum Profit Tax Act that disallowable expense also involves tax provisions like capital gain tax, income tax, any tax that is not petroleum related, disallowed. So you do not add that income tax provision to your expenses. Okay, so that is all that we need. Now don't forget your TET, education tax. It is actually an allowable expense. So you write it what education tax. Now, in this education tax, we'll always do 2 over 102%, right, of your adjusted profit before tax. Now, when you less your education tax, you have a value here, and that will give you what? Your adjusted profit, right? Yes, your adjusted profit. X education tax. Education tax, meaning it does not contain education tax. Okay, so it means that there can be an adjusted profit cum education tax, meaning it contains education tax. So what is the adjusted profit before deduction of education tax? That is the net income. That is when you cast all these expenses against the income, what will you get? So you now do 2 over 1 over 2 of that amount. Why? Because it is 100 plus 2, the amount that contains adjusted profits that contains education tax. Me, I'm just explaining for the sake of people that are wondering, like, why is it like that? Because when they were teaching me too, I was like, why are you saying 2 over 1 over 2? I always want to understand the reason behind it, okay? But if you don't want to understand the reason, you just want to have 50, just do 2 over 1 over 2 times your net income. That is times, let's add all of this, offset all these expenses, and get adjusted profits pre-education tax, that is before education tax. Then apply 2 over 102 of it, right? Let's add, we have 3023 280 plus 653 700. So after doing all of that, we have 1,528,603. Okay, that is after netting the income against the expenses. So we can now do 2 times 1,528,603, and that gives us 29,972.6, 29,973. So that's your education tax. So your adjusted profits, why am I closing it? 1,528,603 minus 29,973,000, right? So you have 1,498,630. Remember that it is having thousands on top, right? So let me go to the first page where I started the expenses. This is where the expenses is starting from. All of this down to your education tax. This is all the allowable expenses. So when you add all of this and you deduct from the total income, that's when you have your adjusted profit. After adjusted profit, to graduate to our assessable profit, we'll treat loss. There's no loss in this question. I didn't see any loss relief. So this is our assessable profit. Assessable profit 1,498,630. I think that was what they said. Okay, yeah, that's the first thing we had to calculate. Okay, that's the first thing in the report. That's 12 marks, 1 million. So this is 12 marks we just earned. Okay, but you've not written the report. See, if you now do 2% of this, see, 2% is 0.02. 0.02 multiplied by 1,498,630. What do you have? 29. Can you see? We have 29,973. 972.6. So that's 9. So that was 2% of this. Okay, but you did 2 over 102 of the adjusted profits before excluding it. Okay, so just learn it that you have 2 over 102 times this, because education tax has to be treated as an allowable expense. So since we have accessible profit, the next thing on the list we have asked to calculate is let me check the question. Chargeable profits. Okay, chargeable profits. So to graduate to chargeable profits, we need to treat capital allowance. Okay, and I thought we were already almost done. Capital allowance. What capital allowance brought forward? That we will start from. Did they bring anyone forward? Yes. In the question, they said the agreed capital allowance brought forward is 33,700,000. So brought forward, write it in full. We have 33,700. It is abbreviated. Then capital allowance for the year, write it in full. It is agreed at 88,500,000. Now the petroleum investment allowance. Okay, petroleum investment allowance workings 3. So let's go and solve in our workings. Just flip 3 capital allowance. That is your petroleum investment allowance. And we are calculating for storage tank. The cost is how much? 23,500,000, and we have to charge 5%. Remember I said it when we were explaining 5%. That's the capital allowance. Then the other one is plant and equipment, the one that has 130 meters. This thing was not showing. Oh God, this class is so I feel so bad, guys. I'm so sorry. I'll organize myself better next time. And I'm so sorry. Please accept my apology. Plant and equipment, the one that is inside water, 130 meters, right? So you're going to charge 15%. Remember that we have 10%, 15%, and 20%. So that is 15% multiplied by the cost is how much? 75 million. So let's put that in our calculator. So that's 1,175,000. That's for storage tank. Then plant and equipment, 15%, 0.15 times 75 million. That's how much? 11,250,000. So I think we can add these two of them. We can add the two of them together to get the total PIA for the year. So we have 12,425,000. So this is what we'll carry here. 12,425,000. Okay. So the total capital allowance to be relieved for that year is plus 88,500 plus 33,700. That gives us 134,625. So total capital allowance. You now go and relieve it a bit. Before you relieve it, you first of all check the restriction. Restricted to 66 to third. Capital allowance. Say capital allowance. Hey, company income tax, that's the one that is 66 to third, right? This one is 85% PIA plus 170% PIA. 85% accessible profit plus 170% PIA. At this point, I deserve a knock on my head. So 85% accessible profit is what? 0.85 times accessible profit 1498 630. We have 1,273,836. Is more. Should we continue? No need. Like there's no need. Then 170% of PIA. 170% is 170 divided by 100. Okay, that's 1.7. So 170% means it is more than 100, so it must be greater than 1. So 1.7 times 12,425,000. That gives us, man, that gives us 21 million. Okay, this one is 1 billion. You know there's 000, so it means that this one will be 21,123. So the total will be what? Plus 1,273,836. That's 1,294,959,000, right? So this is high. You know, you pick the lower. When they say something is restricted, see these amounts, you can relieve it all because it must not exceed this. So definitely you can relieve this. When they say something is restricted, it means that opoju, at most it must not pass this. This is the restriction. That is, if you want to relieve all your capital allowance, don't let it exceed this amount. So because of that, you can pick this amount. So you come and relieve this amount here, 134,625, right? So when we relieve it from here, you know this one is just by the side. You can now have your chargeable. My mind just come down. Chargeable profit. Let me now go and check the back of the question if it's correct. Well, I guess it's correct because I've studied the question now before I just start solving. I've studied it too. 1,498,630 minus 134,625. So we have 1,364,005 as our chargeable profits. Yeah. So since we have this as our chargeable profit, the next thing is to get, what did they say? The next thing, sorry, let me check. Our chargeable tax. Chargeable tax. What's our chargeable tax? 85%. So PPT, petroleum profit tax at 85%. That's points times 0.85. We have 1 billion, for let's say 1 million because it's abbreviated, right? 159,404. Now, wow, these people, they have money, these petroleum people. And you, the accountant that you're preparing the report, you might just be earning 50,000. When I worked in audit, okay, the first audit firm I worked in, I was earning 80,000. Then they increased my salary to 100,000. This was like in 2019 after my NYSC. Then they increased it to 100,000. Then I left there, the worst place I've ever worked. I left there. Then I went to another job. Then I went to another job. Then I went to another job. I'm serious. Then now I'm on another job. Hey God, I beg. So I've worked how many jobs, and I've never exceeded 7 months on a job. That's the highest. That's that audit firm. I've never, because I always get another job. I always get another job. I just get bored. Like, I think this is the only thing I'm not bored of doing. So this is your chargeable tax. Let's now prepare the report. So because when you want to prepare a report, because it's an internal something, all you need to do is to say from, you're writing a memo. It's not an external, so it's not a letter. It's within any communication within an organization is memo, from, to, right? So who are you? Let's see, who did they call you in the question? Let's check that. Okay, you are the desk officer. Desk officer, because that is who they called you in the question. Desk officer of Petroleum Profit Matters. Petroleum Profit Matters. So to the partner, right? To the partner. So that's how you address it. What do you write on top? Nothing. Okay, you can write the name of the company because it's on your letterhead. Maybe Popola, or you can write your name, Popola and Ayomide Accountants. Abi, Popola, Ayomide and Co. Chartered Accountants. Chartered Accountants, right? So this is your letter-headed paper. Then it's an internal memo. Okay, so from this to this, then you write your subject, computation of all those things that you wrote on top of your appendix, accessible profits, chargeable profits, and all of that. So you write it, or you can write it as a reply. Okay, anyhow, you can write it as a reply, that is RE, if it was a memo that was written to you. Depends on how they give you the question, or you can leave it as subject, computation of accessible profits. This is that. So based on, you can just start by saying, based on the computation in appendix 1 as attached. Okay, or you can say, with respect to the matters earlier discussed on Priceless Oil Limited. Okay, I have computed the accessible profits, chargeable tax based on their financial statement for 2018. Find below the values based on the appendix as attached. So just make reference to that appendix where you're going to compute all these income and expenses, right? So you just write accessible profit, because that's what they have to compute. So this is where you'll be marked that 12 marks. Okay, you write your accessible profit 1,498,630. Okay, don't forget that it is in millions, so that's 000. You write it out. Your chargeable profit, I think that's the next thing. Chargeable profit, you got 1,364,005, right? Then you have your chargeable tax. Oh, we need to add education tax. So we need to add education tax to this this EDT that you have calculated here, because you're going to pay it, right? See it here, 29,973,000. Okay, so you need to add your EDT of 29 million 29,973. So let me add that to it. So we have 1,189,377. Is it clear? So you can just write petroleum profit tax and education tax, and you can make reference. This one was from appendix 1. Yeah, everything is from appendix 1, except if you put your own in separate appendix. I think in the solution there's appendix 1, appendix 2, but just, I mean, there's no even time to be writing all those appendix. The examiner understands. They know where to look for the solution, right? So this is everything. This is everything. What's the fourth thing? It was 4. Sorry, let me just check the question. Yeah, the total tax payable. So remember the company income tax. The company income tax that's we had to solve based on the transportation business, right? Remember that I said in other income, you have something in other income. So you're going to go and pay tax on that. Let's just flip to the next page and do that. You can call that one appendix 2 now. Appendix 2. Okay. Remember that income that was included in other income, right? Income from transport of crude oil that we excluded. So this income from transport of crude oil, the amount is 38 million. Then you remember the related expenses that we deducted from, let me see, we deducted it from, okay, 38 million was deducted from it, then we deducted it from operation costs. That's 16,250,000. So you will deduct it here now to be able to get the net income that you will now tax. Because if you just tax this one, you have not removed any allowable expense, and this is an incidental expense. So you now have your profits to be 38 minus 16,250. That will give you 21,750. 21,750. So you can now tax it at 30%, right? So this is what you will call your chargeable profit or taxable profit anyway. Then that's tax. That's the company income tax at 30%. So we multiply by 30%. That will give you 6,525,000. Now don't forget the education tax too. Okay, education tax is at what? 2%. I know it's now 2.5%. Okay, but this is before. This is a 2018 account, right? Education tax is now 2.5% company income tax. Right, education tax is now 2.5% company income tax. So let's do our 2%. 2% is 0.02 multiplied by 21 million. And people will put it on 21,750,000. 21,750,000, and that will give us 435,000. So the total will be what? 6,525,000 plus this. That will give you 6,960,000. So you can now put this here. Okay, company income tax payable tax SITA. Okay, that was your appendix 2. Is how much? 6,960,000. Right, so that's all on your report, and you say what? You put your name and then you sign. So thank you so much for watching. Next we move to November 2018 question 2. That one is a little bit more complex, so click the next video.